Alastair, 4/10 is that inflation reading, pretty much in line with expectations. Are you expecting any impact on the market?
Positive, to be honest with you, considering the UK inflation had dropped by 0.2% on Tuesday even, sorry. I guess the markets have maybe potentially been factoring in that there was every chance that the Eurozone would miss the mark. So meeting expectations in itself is a success. So I think that should give a bit of stability, certainly for the remainder of the morning session.
How serious is the sell-off? It was yesterday's sell-off, do you think?
Well, I think there were some real worries about Germany and the Eurozone on the back of that, and then we got some pretty disappointing US economic data as well, and there was a sort of natural occurrence where everyone just sort of jumped to the conclusion, it felt like, that the continuing softness in the Eurozone was beginning to have an effect on the US, and there was a real fear that I guess that they would be sucked back into this melee that the Eurozone finds itself in.
So certainly a sense that this isn't just healthy volatility we're seeing, right?
I think it's a little bit more than that, unfortunately. I mean, Germany had very much been the sort of star-eyed boy, as it were, who was going to lead everyone to the next phase of the recovery. That's not happened around the rest of the Eurozone, and it feels very much like they've been dragged back to the likes of France and Italy and the others. So it is a real worry, and especially when you consider that they're effectively the sort of the last resort, as it were, the ones that were going to help boost everyone else.
I mentioned Charles Prosser speaking later on ahead of the US market open. I mean, you mentioned the US data. Okay, one piece of US bad data. I mean, let's face it, doesn't necessarily mean we've been not completely off track in the US. What's Prosser going to say later on, and what do you think that's going to do to the market?
Well, you're right. One piece of bad economic data doesn't, but the timing of it didn't help. And I guess, and maybe it was a reflection as much as anything else of the nervousness that there is around the Eurozone as to whether this really was the sort of the turning point in a negative cycle, and whether we were going to start having conversations in the not too distant future about recessionary environments rather than anything else. So I guess the timing as much as anything else was the issue there. Charles Prosser and all of the FOMC members that will be speaking between now and close of business on Friday, and probably in the not too distant future, will no doubt have a stable, if not dovish, tone to their speeches. That's quite possibly what we're going to hear on Friday from Fed Chair Janet Yellen as well. Anything that can buy them a little bit of time as far as the dateline for interest rate rises in the US is probably no bad thing. To stabilise, give them a little bit more time to see how bad the situation is in the Eurozone, see how it develops, and whether the Eurozone and the ECB specifically can do anything about it themselves. So a bit of flexibility and as much wriggle room as they possibly can handle.